Hello and welcome to this edition of the Issue Program. My name is Victor Mwila. This is a platform we are using to dig deeper into the most pressing and relevant topics shaping our country today. From economic challenges to social issues, we bring you discussions, expert analysis, and diverse views to help us understand and engage with key issues that matter most in our country. Today on the issue, we are discussing the state of the Zambia's banking sector, challenges and solutions. And in the studio with me is Bankers Association of Zambia BAZ Chief Executive Officer, Mr. Leonard Mwanza. Mr. Mwanza, I'm glad to host you on the issue today.
The pleasure is mine too. I'm glad to be here.
I'm happy you have managed to find time within your busy schedule. You've been very busy in the past 5 days, moving from one media house to another. I really appreciate you finding time to come.
You're most welcome.
Thank you so much. So first things first, as BAZ, Bankers Association of Zambia, what exactly are you about? What do you do? What's your role in the banking sector?
So the Bankers Association of Zambia is an industry member-based association, and we draw our membership from licensed and registered commercial banks which are operating in Zambia. Now, I must emphasize that these are licensed and registered commercial banks. The financial services sector is larger and wider beyond the commercial banking sector in terms of participation. Because in there you have MNOs, you have non-bank financial institutions, microfinance institutions. But we, as an association, the Bankers Association, we draw our membership from the licensed and registered commercial banks. So those commercial banks, 16 in number, make up the Bankers Association of Zambia. So what then do we do? We are the voice of banking. We are the principal center which looks at what's the policy direction, legislative direction, as well as regulatory direction affecting the business of banking in Zambia. As you know, banking is a highly regulated business. It requires a lot of compliance. So our role basically is to provide that thought leadership around policies, regulation that impact the business operating environment of our members. But we don't just look at the interests of our members. We also do look at the interests of the general public. And how do we do that? We are the implementers of product development that enable financial inclusion outreach in our country. So we urge our members, we catalyze them to respond to the needs of the general market in terms of them developing accessible, affordable products which help to increase financial inclusion levels in our country. We also work in the background in terms of having shared infrastructure on the payment landscape. I'm sure when someone sends you money on your mobile money, you won't know that there is shared infrastructure in the background, supported and owned collectively by the commercial banks as well as the central bank. So the seamless flow of funds in our market is one of those things we champion. We make sure that if there are flaws, if there are issues, they are addressed collectively as an industry. So we're always busy to make sure that in the background, systems are operating efficiently, the payment systems are functioning without any challenges, people are able to access their banking services as and when they want to, and we're increasingly supporting the digital banking space. We are now offering a lot of digital banking options. We have moved away from the physicality of banking to digital banking. So that's what we do on a daily basis. So we're a knowledge center, and we talk to stakeholders, the media inclusive, to just share what we do. But I think at the end of the day, we want to ensure that banking or financial services are not just concentrated along the line of rail. They also reach out to that man, that woman that is doing business in Lukulu, in Chama, in Kaputa, wherever. And so far, I think we're on a smooth journey towards ensuring that we have universal access to financial services in our country.
Now, Investrust Bank has been one of your members in the association, not so?
Very much so. For the last 28 years, Investrust was one of our key members of the Bankers Association of Zambia.
Right.
Obviously, until the sad development, the sad news that came to us on the 2nd of April. So Investrust was one of our key members of the Bankers Association. And for the last 28 years, they've been our supportive member of the association.
Yeah, of course, as you've pointed out, on 2nd April 2024,
Right.
the Bank of Zambia took possession of the bank, and there was a lot of panic among customers as well as members of the general public, and customers were rushing from one place to another trying to see whether they can access their money. I would like you to explain, because what has come out is that the bank was found to be insolvent. So when a bank is declared insolvent, what does that really mean?
So it's a very good question, but one which is extremely sad, painful. I mean, the pain is deep. It's deep to us as an association for one of our members to be repossessed. So it is very painful to the employees and the shareholders of the bank. But equally, far-reaching depth of pain is to the depositors of the bank that were entrusting their hard-earned money with the Investrust Bank. So, but let me just give a bit of background in terms of the process or the environment in which commercial banks operate in our market. And this is not just unique to Zambia, I think it's world over. To operate a business of banking, you must know that it's a highly regulated business. So you don't just open a bank, you apply to open a bank to a regulator, and the regulator and the licensing authority in this case is the Bank of Zambia in our market. So they've prescribed minimum thresholds in terms of the capital you need to have, in terms of the risk-weighted ratios you need to have, the liquidity ratios, a number of things. So let's start with the capital position, for instance. Since 2012, in our market, a local bank requires 105 million Zambian kwacha. A foreign-owned bank would require 520 million kwacha. So in an event that any of the prudential benchmarks, including the minimum capital, falls below the minimum threshold, the Bank of Zambia, who is the regulator, is empowered under the Banking and Financial Services Act. Let's take it like it's a football game, right? A lot of players doing the business of playing the ball of banking. So the referee in this case is the central bank, who is the regulator. So the referee will raise a yellow card and say, I think there's something I've noticed which is not aligned with what you're in the way you're supposed to play your game. So they'll raise a yellow card first. This is where they come in and say, we feel maybe your capital position is below the threshold, your risk-weighted assets are below the threshold. We want you to continue doing business, but we want you to work on these things. So they'll put the bank on what we will term corrective actions, where they'll tell them, we've raised these exceptions. They'll put them in writing. These exceptions needs to be remedied. And then they'll talk to the shareholders, they'll talk to management to say, can you work on these issues? Now, all that process is aimed at salvaging the bank, ensuring that the bank continues doing business within what the law says. And the law in which the banks in Zambia operate is the Banking and Financial Services Act. Now, let me pause there. You must adhere to all the prudential benchmarks. If you don't, the referee, who is the regulator, the central bank, will raise what? A yellow card. If you commit another offense or you continue to have those exceptions, you have a yellow card, right? What is the next course of action the referee will do? They must raise the red card. Now, this is where we are, at the point where you say, no, you can't continue because I've given you time to work on these issues. It has now reached a point where I must give you a red card. Now, a red card in the world of banking, that's where the regulator comes in and says, I am now moving in. what does that mean? Because it's not just takeover. There are a lot of things involved in that.
Sure.
Then they'll just say, fine, I'm moving in, so stop operating. So already, I think the bank is not operating. They are not on the payment system. They've been disconnected. Their ATMs are not working. Their branches are literally closed. Their members of staff are literally staying at home. So they are not going to operate. So what happens in the interim? The referee has taken over. The regulator is now in charge. They will have to appoint an interim team of administrators who will go in to prepare what they're calling the statement of affairs, obviously in collaboration with some of the senior management teams in that bank, so that they can now verify what assets do you have, what liabilities do you have. Now for a bank, among the key assets will be loans, right? And among the key liabilities will be depositors' money. So they want to know who borrowed and what state of that loan. Who put money in the bank as deposits and what's the value of that deposit. So they will have to do the verification process and make sure that the accountant say, right, we now fully understand the financial position of the bank we've taken over. That process can take as long as 90 days. And then after that, the central bank will come back to say, I went in, I saw, I verified, and this is the position I saw. Does it sit well with the metrics, the benchmarks according to the law, the banking and financial services? They will say there's an exception here, there's an exception here, there's an exception here. What do we do? So there will be two options. It will be either a positive outcome, which we should pray that it becomes, or it will be a dead end and a negative outcome. If it's a positive outcome, this is where you find that the bank is restructured. Maybe there'll be someone who'll be interested in taking over that bank's asset, including liabilities. The way it happens with Intermarket, I think in 2016, we now have a thriving bank called the Zambian Industrial Commercial Bank, which is doing extremely well. So it is that process that has now commenced. So it ceases the operation of the bank. Customers right now have no access to their money. Neither will their staff have access to their desks in this institution until this process is over. And then we'll wait for guidance and an announcement from the regulator in terms of the next steps to take. So this entire process, unfortunately, is one which is sad. It is one which is filled with a lot of emotions. We understand the pain the customers are going through, just as we also understand the pain we ourselves are going through. I mean, when you're a family, a united family, and you lose one member, what follows is mourning, sadness. So even us, we're in that period of pain, but we are more worried about the pain that that customer is going through. We don't look at it as a customer. There are people behind it. So the pain that that individual will go through, the family pain and the business pain, well, it's sad, but unfortunately, that's how it is, and that's what we must all follow, and we just have to wait patiently until the conclusion of the matter.
And so before we take a break, Mr. Mwanza, I would like to find out what it means effectively, therefore, is that customers of the bank cannot access their money anywhere. They can't use another bank to withdraw that money. It's a day. For now, nothing can happen.
For now, nothing can happen. The bank investors has totally been switched off from the payment systems. You can't send money to, you can't receive money from. Neither can you use the instruments you have in your hand, like cards, to withdraw money anywhere, whether in Zambia or outside the country. It's no longer operating on the payment landscape. Remember, it's the duty of the regulator to protect the integrity of the payment system, financial sector stability. So what they did was that when they saw that maybe this problem are becoming bigger, they took action to what? Disconnect. And they are disconnected. They are not operating. So with effect from 3rd January, those that transacted on 2nd, they did, because the communication came when the bank are just closed. So there are people who transacted on 2nd, but those that try to transact on 3rd, even now, they will not have access to their money. They are not participating.
Okay, we take a break right here, and When we come back, we're going to continue looking at the state of the banking sector in Zambia, challenges and solutions. We'll be back shortly.
The Issue is a program that looks at topical issues happening in the country. Watch The Issue every Friday at 19:30 hours, only on Zanis TV, Channel 6 DTT and Channel 458 DTH on Topstar. Don't miss.
Welcome back. This is the Issue program. And today we are reflecting on the state of the banking sector in Zambia, challenges and solutions. And in the studio with me is Bankers Association of Zambia CEO, Leonard Mwanza. Mr. Mwanza, we talked about the challenges that customers of Investrust right now are facing. They can't access their money. And I want us to reflect on the overall health of the Zambian banking sector, because Investrust becomes the second financial institution that BOZ is taking over or taking possession within a space of 1 year. There was DBZ and now Investrust. So then how do you describe the overall health of the Zambian banking sector?
I think what we need to first of all appreciate is that it's been quite a while, over 20 years, when we had a bank failure in our market. So for the last 20 years, we haven't had, before that, it was almost like an expectation. Almost every year, maybe 1 or 2 banks would be closed for various reasons. But for more than 20 years, we have not had a bank failure in our market until obvious last year when, as you put it, tried DBZ was taken over. I'll elaborate on that a little bit later. So when we look at the overall regulatory health of the banking sector, when we aggregate, if you go by the last 3 years, you will note that one of the most profitable economic sectors in our market has been the banking sector. They've been reporting very good profits. Their capital adequacy positions have been above average, very satisfactory. The non-performing ratio on an aggregate is actually below 10%. We closed, it was around 4.2% end of the year. Now we are talking about the aggregate regulatory health of the sector.
Yeah, because what this has done now is, even where I am, I'm now thinking, this is a possibility. I might find that my bank is in the same position.
Well,
and
fair enough, the fears are all justified, but let's look at the aggregate performance. As I'm saying, the regulatory health of the banking sector has been above satisfactory levels over the last 3 years. This is on average. But we are not saying that out of those averages we will not have an exception. So in this case, we've had an exception in terms of one of the banks whose benchmarks have fallen below the prudential requirements. We should not take that as a norm, but rather than as an exception. So if the others are operating within fit and proper or sound regulatory health as guided by the central bank, my answer is we had 16 right, one has challenges right now, but the other 15 are sound and safe. So on a general perspective, let's say the banking sector still remains resilient, still remains sound and safe. And we urge the general public not to panic, but also for the investors, customers, as they're going through this difficult situation times. I mean, they have got 15 other banks now to choose from. They can choose whichever bank they feel which is nearest to their needs and which can serve their interests. So we still have 15 banks that are operating. I mean, so I would say the banking sector has been performing exceptionally well, and the regulatory fitness and health is right and sound. The exception that has come out from one financial institution is always going to be that exception. You know, as in a family, Even if you are 10, there's always going to be that one troublesome child, right? So we are also a family, and unfortunately we found ourselves in this situation where one of our members is on the fence, and there's no community that has all right-thinking people. There's always going to be that one exception. So even us as an industry, we are sitting in a situation from a regulatory fitness. There's been one exception, and that exception, the actions we've seen being taken by the central bank.
Looking at the sad state of affairs, I mean, BOZ is now taken over, and there are arguments that perhaps the central bank should have considered a better option of, for instance, lending money to Invest Trust so that the operations of the bank are recapitalized. What's your view on that?
Before I take this question, let me come to the comparison between DBZ and Invest Trust. So DBZ was not a deposit-taking bank. They were more of a wholesale lender to businesses. Then over time, I think their loans were not performing well, so that eroded their capital position. And once the shareholders were not in a position to recapitalize the bank, the central bank has taken that particular action. Obviously, we're still waiting for the next course of action. Remember, they also did the same process, right? Prepare the statement of affairs. They are supposed to come back to us whether DBZ is going to be restructured or it's a dead end. I think the central bank is yet to come to the market to advise the way forward. I'm sure they're engaging their shareholders to see whether there's a way out of how they can restructure that bank. Now, the difference between DBZ, I think, is one in the regulatory requirement in terms of capital. Now, Invest Trust is where the real pain comes in, because for DBZ, they are facing borrowers. Now, for Invest Trust, you are facing both sides of the coin, the borrowers as well as the depositors. So that's why it becomes a bit complicated. Now, coming to your question, the Bank of Zambia is not a supporter for shareholder funds. That's why they are the regulator. Their action or their role as a lender of last resort comes in when, during the interbank, as banks are paying each other, they are making the settlements. If during the intraday settlement, a bank finds that they are short of money, the Bank of Zambia is there to provide that support through the interbank or the overnight lending facility. So you can actually, what banks do is they could borrow from each other on the interbank market, or they could go to the overnight lending window at the central bank to say, we are short of this kind of money to settle our colleagues, can you give us? That's why the Bank of Zambia becomes a lender of last resort to commercial banks, and they do that every day. But for them to do that, they must ensure that they are lending to an institution that will not have an impact on the overall health of the financial system. They do not come in to lend money to a bank to increase its shareholder position. No, they don't do that. They can have targeted the intervention like we are doing the COVID to support industry. Those are exceptions. But their role as a lender of last resort is not meant to bail out shareholder capital for operating banks. It is meant to provide the liquidity for intrabank payment settlements. So every day at the end of the day, there is one bank or the other who may be short of cash, liquidity. So to cover those positions, they can borrow. And they borrow at an interest, and then they expect it to pay back maybe by the following morning. So the aspect of lender of last resort is part of the normal day-to-day operations, and they do provide that support on a continuous basis.
Now, we should be concluding. In your role of building trust and improving public perception in the banking sector, with what has transpired, what measures have you put in place to address what's going on right now? And as we are closing, your last words to customers. Yeah.
So it's a very good question. So on one hand, the central bank is on trial, right? Like, they've made a very difficult or bad decision, if you are going to call it that way. But on the other hand, on the positive side, that's a very good decision in the sense that they want to ensure that there is continuity of trust and confidence in the banking system by avoiding the contagion effect that could have come in had they not taken this particular action. So they want to look at financial sector stability, they want to look at integrity of the payment system. So at the end of the day, the outcome is that when you are dealing with a bank that is operating, it is operating within a satisfactory operative framework as guided by the regulator. So in one way, you are saying we have someone who is weak. It's like removing the weaker player in a football pitch, right? If I can give that as an example. I mean, you always substitute, right? When you see that maybe your number 2 is not doing well, what do? You substitute him, right? And put in a new person. But in the banking sector, that substitution is a bit painful because that would mean totally being removed from the system. They could be rehabilitated through a restructuring, or it would be dead end, meaning they will never play the business of banking again. So that's where the situation is. So on a positive side, it means we're now moving ahead with strong players. So the remaining 15 banks that have remained operating, it means they are safe and sound. So the customers have a choice in terms of where they can place their trust and confidence. And we urge calm and patience, that the exception of one should not be seen as the norm for the rest of the other banks. For the customers at investors, we share in their pain. We can only wait patiently to see the outcome of what comes out from the central bank. Unfortunately, we can't change what the law says. If the law says prepare a statement of affairs over this period, unfortunately, that has to be done. And then a decision will be made. And that decision, I would say, let's await calmness, and they should be patient, and that they should be ready for any outcome that comes out of there. It could either be a positive outcome, they have access to their full deposits, or a negative outcome where it would take longer if it went into liquidation. Unfortunately, that's how it is. Painful as it is, we only pray that it will be a positive outcome, taking a cue from what happens with the recent takeover, like at Intermarket, where no depositor lost any of their monies. After all the process had been done, customers were invited back to this new bank. Those who wanted to withdraw, they withdrew. And you saw continuity. They've continued and they're doing very well. So we can only pray and hope that we'll have another good ending where customers, after the due process is completed, could also have access to their money. But we must caution that it can go either way.
Mr. Mwanza, I would like to thank you so much for coming to the studio once again and making an appearance on the issue program.
The pleasure is mine, and I'm very, very glad to be here.
Thank you so much once again.
You're welcome.
Well, viewers, that's all we had for you on the issue program. We were discussing the state of the Zambian banking sector, its challenges and solutions. My name is Victor Mwila. Until next time, it's goodbye for now.